Hey there. Welcome to The Hash. It's me, Zach Seward. I'm joined by Naomi Brockwell, Will Foxley, and Jen Sanasi today. We're going to get you caught up on all the latest that is going on in the world of crypto and more. And I am going to toss it to Will to get us going on that noble mission. Will, start us off, please.
That's right. This morning, we're going to start off with a little DeFi talk. So according to a new report from Chainalysis, North America is now in second place for total crypto transactions. So we're kind of looking at this picture saying like, what is a crypto transaction? What is not? They're kind of saying like, ooh, if we're moving money from here to here, that's kind of what we're comparing. Europe was in first place with over $1 trillion of crypto transactions over the 6-month period that they were testing. China and East Asia notably tumbled over this period. That was mostly due to the new edicts out of China that are pushing out a lot of crypto exchanges and a lot of the crypto industry in that whole area. DeFi, of course, was the hallmark of this report. DeFi in North America, there's been a lot of hiccups for sure with the SEC cracking down on it in some cases. Some people weren't even able to get airdrops like the DYDX airdrop earlier this last few months. So there's been some kind of hiccups there, but on the most part, DeFi has been leading the way for adoption of cryptocurrency in North America. Naomi, I want to throw this to you. I guess my question is, I'm somewhat surprised that North America isn't in first place. I think when people see headlines about crypto or Bitcoin, they're all assuming that it's happening in North America. And then we look at this report, we see, nope, it's actually happening mostly in Europe, and historically it's been happening a lot in East Asia and in China. But North America is coming up in the ranks, which is probably better for prices, I guess, overall. But I'll leave it there for you.
Yeah, I'm actually surprised that North America ranks so highly, considering that there's been so much crackdown from the SEC and there's such regulatory uncertainty out there. So many projects are being pushed offshore. People in America are not getting access to projects because the SEC is making sure that they don't have access to projects. So I'm actually surprised that it's still doing so well despite all of this. It makes a lot of sense to me that Europe would be in the lead right now. What was interesting about the report was that China actually, it wasn't when China announced the bans that they started to tumble. It was actually April 2020, the volume started to drop in East Asia, which was a surprise to me. I didn't realize that. And there was an explanation for why this might have been the case. Obviously, China has been moving towards a long-term big ban for a while. This year wasn't the first Chinese ban. They've banned it multiple times in the past. And so maybe that continued crackdown was making people look elsewhere in terms of, finding a way to have a sustainable business. Perhaps it wasn't a smart play to keep it inside China. Maybe people were seeing that. But also there was an interesting note that China actually started testing its own central bank digital currency that month. So the month that it actually started to tumble. So perhaps the Chinese miners and Chinese companies saw the writing on the wall with that and realized that China did not want a competitor to their central bank digital currency. Turns out that they were correct, and now they completely crack down on it. So that was an interesting note from the report. But Jen, I'll throw it to you for your take. Jen is frozen, so I'm going to throw it to Zach.
Oh, Jen's frozen. What the heck? All right.
Yeah.
You throw it to me. Yeah, DeFi, man. When the regulators get caught up to where crypto is now and not where it was in 2017, it's going to get really interesting. And numbers like this suggest that it's going to matter for a lot of folks. So this to me is super duper interesting. We just reported as we were going live that Uniswap Labs, which is obviously the team behind Uniswap, largest DEX on Ethereum, hired a former Obama spokesman as its new head of communications. So the human capital that's flowing into the space to shape these conversations around DeFi and regulation in the U.S. context, we're seeing more of that. It's going to be really interesting to see how these conversations unfold, especially since DeFi is surprisingly big over here. So it's going to be interesting to see how it all shakes out. But Jen, if you are not frozen, wave your hands in the air.
I'm not frozen.
And wave them like you just
back.
Don't care. Okay, I'm going to pass it down to you. What do you got?
Yeah, I'm not sure what you guys spoke about while I was gone for a few moments there. But I saw a headline this morning that said this report said that the trading volume on DeFi platforms outperformed those that of central exchanges, which was really interesting to me because I think we've spoken about it on the show a lot as central exchanges being this on-ramp for people who are new to the space. And there are still a lot of people who are really confused about DeFi and don't know how to get involved. And so it was interesting to me that the trading volume is outperforming that of central exchanges. And Will, I wonder, is this just that people who are operating in DeFi are operating in it at a larger scale, and we still need to get that mainstream audience on board somehow?
I'll give it to Naomi. She looks like she has an answer to that question.
Yeah, I definitely have a take there. So if you're looking at centralized exchanges, what they're great for is the fiat on-ramp. When people are trading, they're not going back and forth between fiat and crypto. If they're going to find a hedge, they're probably going to go into a stable coin and staying within the crypto ecosystem. They definitely don't need a centralized exchange for that. Honestly, I don't see much relevance for centralized exchanges for a lot of what DeFi participants want to do. They're all in decentralized exchanges because there's less KYC in those areas, is more liquidity, there's better fees, like all of that stuff plays a part. DeFi has just become better in so many ways, which is just so far above where we were just a few years ago, where there was no liquidity in the DEXs because we just hadn't figured out how to have these automatic market makers yet. And now they're just all through the DeFi space and there's so much liquidity there. So yeah, people, the majority of trading is just not going back and forth between fiat and cryptocurrency. So there's just not as much of a reason to use centralized exchanges, but I'll throw it to Will.
Yeah, I disagree in part on some aspects of that. I think centralized exchanges definitely still have their value. If you're looking at like bids and spreads on purchases, you're still going to get a better price quote on a centralized exchange, just because something like Uniswap or Curve, where you're seeing larger movements of trades, you can't quite get the bids that you would on a centralized exchange. I think it's getting there. I think one kind of highlight of this report that CoinDesk touched on, I think last month in a report, is that OTC desks around China have been shutting down, and that makes up a sizable percentage of trades in the crypto market writ large. It's not something the average retailer is really thinking about, but OTC desks do matter. They're moving large amounts of capital, often Bitcoin or Ethereum, across the ocean and between different players in the space. And a lot of these OTC desks in China have had to shut down or move offshore. So I think that makes up a large reason why we're seeing that a lot of the KIP volume is moving out of that region. Naomi, I'll throw back to you before we get a break, though.
Yeah, I just
Or
wanted to
next
ask
story,
you,
rather.
Will, how much of the how much of the volume is due to liquidity mining? Because as we know, BlockFi has been set all of these subpoenas from all over the country and cease and desists and all kinds of things. We've got Coinbase saying they can't offer their lend product. Anytime you have a centralized player like Celsius, they're all being attacked by regulators. But DeFi, you're still able to earn all this interest. You're still able to move that money and actually make the most of all of this liquidity mining. So what percentage of this volume is coming from all of that?
Yeah, I don't have a good number off the top of my head, but I think you bring up a really salient point, is that a lot of the volume in DeFi is incentivized to be there by token rewards. And that's the question for DeFi still to answer. Will people be using these applications once those incentives dry up, whether the token prices dry up or the teams decide to stop issuing tokens? For example, Compound Finance issued their comp token last summer in 2020. And then after the token rewards started drying up, price went down a little bit, and then some other competitors popped up. Wasn't saying that Compound's out of the game, but definitely less reason to use it compared to other exchanges if you're not going to get a token reward. So that's a very fair point to bring up.
And Compound, I want to know what's happening with them. Maybe we can dive into that in another episode, because that was kind of like, what's going to happen with all of that money being taken out? But let's move to the next topic for now. I want to talk about the antithesis of the DeFi world, the central bank world. So we had the Bank of England warning that crypto could cause 2008 level meltdowns. They issued this big warning in this talk. So the Bank of England's Deputy Governor for Financial Stability, John Cunliffe, warned that cryptocurrencies could spark a global financial crisis unless tough regulations are introduced. I want to dive into and rip apart so much of what was said here. One big part that he mentioned, he said crypto assets pose a financial stability concern since the majority have no intrinsic value. value and are vulnerable to major price corrections. He said a lot of things here. So there's a lot to unpack. I'm going to throw it to the group for your thoughts. Zach, do you think that crypto could cause a 2008 level meltdown? And maybe I'll ask it in a loaded question kind of way, because it seems to me that there was a 2008 level meltdown, and then crypto was invented as an out for people so they could safeguard their wealth, because these meltdowns happen by governments all the time. So it does seem to me like he's kind of inverted, but I'll throw it to you after that loaded question was posed.
Yeah, I'll hit that softball right out the park. I think that this is an awakening moment for people everywhere in positions of power. Crypto is still fairly niche. I forget the latest user metrics, but I don't think we're exactly at the point where it's going to cause a systemic failure in the financial system. But I think people are starting to wake up to the possibility that that could happen, and that's what we're hearing from central bankers the world over these days, is thinking about the potentiality for that to occur. So whether or not it could cause a 2008 level financial meltdown at this point in time seems a bit much for me to believe. Whether that could be true in 5-10 years, maybe plausible. So they're trying to think about this stuff in those terms and trying to rein it in to the best of their ability, because it does pose some existential questions to central bankers the world over, right? If they lose control of their money supply and the ability to pull the levers to make their economies work in the best interests of their constituents, we'll grant them that. We'll grant them that here. That is quite threatening to them. So they're trying to think about how to harness, curtail, or other the energy that's growing around cryptocurrency here in this place and time. But right now, I think this is certainly a prospective statement. We'll have to see a lot more adoption, a lot more widespread usage of these things for crypto to really circumvent the traditional financial system, in my personal opinion. But I will toss it back to you, Naomi, because I want to see you go in.
I've got a lot to say, but I did see Jen's hand go up, so I'll throw it over to you, Jen.
I'll be super quick. I mean, reading this it just read like comments of someone who is so afraid of losing control, to what Zach was saying. And the comments felt like they were said to really scare people who don't quite understand crypto yet, are trying to learn about it because it's something that they're hearing about. But now there are these comments, and I just want to read one. The Cunliffe said, if you build a better mousetrap, the world will beat a path to your door. But it has to be a truly better mousetrap, and not one that simply operates to lower standards or to no standards at all. And so these comments that he's making, there's no standards. There needs to be strict regulation, or it's just not going to work. It's going to be pandemonium. Just feel like comments that are meant to scare people away from the space and to really keep a grip on that control. But I'm sure, Naomi, you have a lot to add to that.
Well, let's start with the mousetrap comment, because that's one of the most idiotic things I've heard, because he's basically saying if you build a better mousetrap, people will flock to you. But, it can't be a less better mousetrap. So, what is he even saying here? Is he saying that, that if something's not offering genuine improvement, then no one will flock to it? Okay, so people won't flock to crypto. So what's the issue there? Clearly crypto is providing value and people are moving to it because they see that value in it. So I don't even understand what he's trying to say with that better mousetrap analogy. It seems like he's missing the point. But let's dive into some of the other analogies he's made. He's talking about the subprime mortgage market prior to 2008. He's talking about the knock-on effects that ultimately brought the global economy to its knees, and saying that these aspects are becoming prominent in the crypto space. Let's make no mistake about it. The subprime mortgage market was completely propped up by the government. This wasn't a government-enabled thing. Yes, we've all read The Big Short. Yes, we all know about how they, repackaged things and classified things incorrectly. That all played a role. But the government brought the punch bowl and the bankers got drunk. That is how it worked. They had all kinds of quotas. They were basically paying Fannie and Freddie to buy all of these, they had quotas, right, for the amount of subprime mortgages that these institutions had to be purchasing from banks. And banks had to meet those quotas, or, they wouldn't, as part of the Community and Reinvestment Act, they weren't allowed to expand. They lost all kinds of privileges. So they had to keep issuing these mortgages, more and more subprime mortgages. And so this was something that the government was just fueling over and over. It was a crazy situation. And now he's saying well, we don't want it to happen like that. Where the government screws something up? Yeah, we don't want that. That's why we have something from the private sector. That's why we have cryptocurrency. This is the solution, not the problem. the 2008 meltdown isn't going to be caused by crypto. That is coming. That's coming because the government is printing exorbitant amounts of money. It's because the government is redistributing the wealth of the poorest people in our economy and just giving it to the coffers of all of the crony capitalist friends of politicians. That is why there's a meltdown coming, and the poorest people are going to suffer. And crypto is an out for those people because it enables them a tool where they can safeguard their wealth. So Cunliffe is completely off base with all of this. It's crazy for me to continue to read this stuff. But then when he talks about, crypto assets have no intrinsic value, like there's nothing backing gold, right? Gold is the asset. These people don't understand that cryptocurrency is the asset. These are the things that are providing value and people are valuing. So when they start saying things like that, it shows that they don't understand why people are involved with crypto and the value that it presents. But Will, I'm going to throw it back to you.
I feel like we should be rejoicing at this headline and not be getting so frustrated.
Oh,
this
no,
is a good thing. The beast
agree.
is scared. The beast is scared. Fret not, Naomi. We are winning the war and things are getting better here. So that's all I had to add.
It's passion, not anger. It's, if we look at this situation, we do have crypto as a solution now. If we were seeing all of the things going on from, monetary policy around the world, not just US government, but all kinds of governments around the world, including central bank in England, we would be horrified because we would be stuck into this system where the only way we can make digital payments is through these traditional financial payment rails, using their fiat currencies, using their sovereign currencies. We don't need to even be a part of that system anymore. And that's what's so exciting. And I know I seem angry talking about this. I'm not angry. I'm just really passionate and so grateful that we finally have an out. And yes, there probably is going to be a meltdown, but crypto is not the problem. Crypto is the solution.
All right, we are taking a break. There you go. Mic drop moment here on the Hash. Let's do this.
Take a drink of water and calm down.
When we get back, I bet you're wondering why Polkadot is pumping a little bit. We'll tell you why if you stick with us. Talk soon. Thanks.
Hello, everyone. Welcome back to The Hash. We are going to chat now about Morgan Stanley. So Morgan Stanley CEO James Gorman said that his bank is not seeing much client demand for crypto. So I want to take a little walk down memory lane, okay? So we'll remember in April, the bank announced that they would offer wealth management clients access to 2 external crypto funds. In June, they bought more than 28,000 shares of Grayscale Bitcoin Trust as a response to demand from clients. And in between those two stories, it was announced that Morgan Stanley's new Bitcoin product raised $29.4 million from 322 investors in just 14 days. Now, Gorman says it's not a fad. He believes it's here to stay, but there's just not a lot of demand. So, Naomi, you had a big rant, so I'm not gonna pass it to you, Zach.
Oh yeah,
I'll take it. Yeah, man.
Zach, take it away.
You got James Gorman versus Jamie Dimon talking Bitcoin on the street, and hey, James Gorman, he's like, hey, you know what? It is what it is. It's here. It's not going away. It's not breaking the bank for us right now. It's not changing the economics of where we are as an institution. But hey, we're going to offer it. It's here. It's not going anywhere until we see bigger demand. Expect us to kind of stay the course with whatever limited offerings and exposure we offer to the space. But it's good to hear. I mean, this comes a week after Jamie Dimon famously kind of reiterated his famous antipathy to the world's first cryptocurrency, and to hear another big banker guy like this saying, "Hey, I mean, it's not a fad. It's not breaking the bank. Again, it's not our bread and butter, but it ain't going anywhere." It's interesting to see these diverging opinions from some Wall Street titans. But I'll toss it down to you, Will. Curious for your thoughts.
This is just like the last headline we're talking about. This is a good headline to start off the day with. Why? Because we don't want bankers to be part of the system necessarily. We want there to be like some sort of disintermediation where you don't have to use a bank. Like if you want to use a bank, you can use a bank and it's there. But it shouldn't be a huge part of what banks do going forward. Why? Because you can custody your own funds by yourself for free with the security of the entire network at your back. You don't necessarily need to use a bank anymore. You don't need to be paying them funds. You don't need to be paying them fees. You don't need to be paying them to custody all your funds. Like that's something of the past. That's something that Bitcoin enables us to not have to use those bankers anymore. And so it's not surprising to me to see that banking giants aren't making a ton of money off this, because why would they? There's not a ton for them to do. Custodying Bitcoin, you can do that yourself at your house for free. You give it to a banker, you don't need to pay them that much. There's tons of people who can do it for you for very cheap, and all the risk is on them. So it's not necessarily a great thing to do. If you're looking at trading, there's tons of different trading platforms you can use. Just plug it into your Chrome browser and boom, you have all the trading applications at your fingertips. So it's not surprising to me at all to see that they're not making a ton of money on this. I would say like they're probably looking for the higher institutional clients who are trying to make big purchases of crypto. Again, like there's players out there that do that already. River Financial is one that comes to mind. They opened up about a year or two ago, and they make a lot of big purchases on behalf of institutions of Bitcoin. Other older bankers, they don't have those infrastructure pieces in place to be able to do it. That's why we've seen things like NYDIG really take off, because they're kind of putting the structural pieces between traditional banks and these neo banks that we're seeing coming online. So again, just it's not, this headline makes sense to me. Totally makes sense to me. Jen, I'll throw it to you though.
Will, with the optimistic takes today. I love the optimism. Thank you. Well, okay. So I think though, when those stories that I was just talking about, when we took that walk down memory lane, they really kind of happened when Bitcoin was hitting its all-time high and the price was kind of soaring. We saw the line on the up and up. And I think that could point to why there was more client interest or more client demand. I think we've seen the price kind of level out. Things have calmed down. And so that makes sense what you're saying, Will. Naomi, I think I saw your hand up before I make my next point, though.
I promise I won't rant. I will say I agree 100% with what Will said. There's just no real niche for companies like Morgan Stanley, because institutional investors are going to Coinbase. Coinbase has really got such a strong foothold. And if you want to invest in crypto, you're going to go to the experts, not a bank who previously has called this a fraud and doesn't really know what they're doing. You're going to go to the people who, are trusted in the industry, have been around for a really long time, and Coinbase has really filled that need. Then if you're dealing with just like everyday customers, right? They're not going to go to something like Morgan Stanley either. They're going to Robinhood. They're going to PayPal. They're going to Cash App. Obviously, these places aren't places where you can actually have crypto in any real sense, because you can't move it off the app yet. That functionality is apparently coming for all of those platforms. For Robinhood and PayPal. And they'll be great, but young people just aren't going to be using a bank for this stuff. It's just really not their niche. So Morgan Stanley, it makes sense to me that they're not really getting into this. And maybe Jamie Dimon should have been more careful with his comments. And otherwise they might have more clientele if he wasn't just around calling it a fraud for a bunch of years. But I'll throw it to you, Jen.
Yeah, I've asked this question on the show before, and I want to ask it again. What is the role for a traditional bank of the future? We look at traditional institutions and we say that they need to innovate and be forward thinking, and it seems like maybe in this case they are trying to do that, but there's no place for them. And so what's their role? Should banks be afraid? Just like, we're talking about central banks being afraid. Should private banks also be in that camp?
Probably. As Will said, we need banks because in order to send money across the world, we've needed these trusted entities to facilitate that. Crypto takes away that need because it's decentralized and it moves that trust into the cryptographic space. And so we no longer need to trust third parties to move this money. Especially if the banks are going to be charging fees for all of this stuff, it makes a lot more sense to be using cryptocurrency. But I think I saw Zach, your hand going up.
Yeah, I will say that for some of these larger institutional players, there are custodial requirements that are mandated by law that they have to partake in, right? So as right as Will is, in that you can custody your own crypto quite easily, some some banks aren't able to do that because of fiduciary requirements. So I don't think the banks are going anywhere, but Coinbase, right, has rushed in and become the key institutional broker for many, 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 many institutional investors. And if the banks are going to be worried, they should be worried about some of those folks. All right, we're going to change gears. We're going to go deep into crypto. We're going to take a crypto turn here. We're going to talk about Polkadot. Polkadot. We often talk about layer ones on this show. The way I've been thinking about Polkadot lately is as a layer 0 on which layer ones can live. So what they did here is they submitted a governance proposal for those future layer ones to earn a spot on this layer 0 network to power all sorts of applications in a more decentralized fashion than what we currently are seeing. So this news came out yesterday, right at midday. DOT was trading at about $32, $34, DOT being the native asset of the Polkadot network. Shortly after the asset was touching all-time highs up in the $43 range. So clearly investors are seeing this as a positive signal for where this network is going. I'm going to toss this to Will because Polkadot is always one of these ones where it's like, it's always almost there and it's never quite there. And it's been almost always there for the last couple of years now as they work out the kinks to this pretty complex system. This is as close to sort of the main stage debut that Polkadot has ever been, and investors seem to be rather excited about that. So I'm going to toss it to you for your initial take on Polkadot submitting a proposal for parachain auctions slated to go live November 11th.
Totally. I think that a lot of these smart contract chains are always in that almost ready stage. I think we've only seen really Bitcoin kind of be like ready and always kind of moving. Ethereum's always trying to move to ETH2. Cosmos is almost always deploying new things. Polkadot's kind of in the same camp as you said, Zach. They're almost always preparing for some sort of new launch. Auctions on chain is going to be a huge deal for them for sure. Like you said, they kind of tout themselves as a layer 0 solution, which in techno speak basically means that they are going to be able to be the anchor for a lot of other blockchains and applications. So typically, if you're familiar with like the DeFi ecosystem, what you think of is like Ethereum is like the clearinghouse, and you have like these trading venues built on top of it. So you have a layer 1 and a layer 2. I guess you could kind of say it that way. Here, what Polkadot wants to do is be the foundation that other blockchains can build off of it. And all these blockchain ecosystems will be able to tie in to Polkadot on the base layer and then also speak to each other across the way. So then you have like this more immersive system that uses like a shared security model. It's pretty complex. And I think that's why there has been a lot of delays. It's a pretty new system. There's a lot of new tinkering with it. And that's something that Polkadot has really prided itself on, has been the ability to move with where technology is going. Compare that to Bitcoin, and even in some instances, compare that to Ethereum, where those two chains have more static governance models, and it's harder to get things done. It's harder to get Lightning done on Bitcoin. Why? Because there's so many different people involved. It took years to get a protocol change for Lightning to be able to work, and we're still seeing slow adoption there. Took a very long time for a lot of Ethereum tech to get brought up. Polkadot moves a little bit quicker on some aspects, and I think we're going to see a lot of those behind the scenes tech works come into fruition with this auction chain launch. But Naomi, I'll throw that to you.
Yeah, just on your point, Will, that you brought up, it's very interesting seeing the different models of move fast or move slow. And when you're dealing with someone's money and you have all these upgrades that are not necessarily backwards compatible, it does become an issue. There have been upgrades throughout the ecosystem in various cryptocurrencies where if someone had just kind of forgotten about their stuff, then they might lose access to it. Now, that's not something you really want from a money. You want something that you can kind of put away and not have to be dealing with it every day, just be living your life. So there is something to be said for making sure that everything is laboriously backwards compatible and you're not going to break anything, even if someone hasn't touched their crypto for a really long time. But I definitely do see the trade-offs there, and that you don't get the same innovation going onto the chain that you see on some of these other chains. But I'll throw it to you, Zach.
Yeah, we've seen, Kusama, which is Polkadot's canary network, quote unquote canary network, really capture a lot of attention and interest. And there is some uses there, but it's always sort of in this sort of like not quite fully baked, ready for prime time mode. So I'm very excited to see some of these emergent projects on Kusama sort of jump to the Polkadot layer and potentially take off from there, because it's one of these projects that has been a long time coming, and I think there's reason to be excited around it, especially around some of the shared security promises that Will alluded to. But again, this it's always been almost there. So for it to get one step closer to being actually there is actually quite interesting. It's going to be probably a bigger force in the crypto ecosystem come next year. So it's going to be interesting to watch. Let's see, Jenna, any final thoughts before we wrap this thing? What do you think?
No, this story was so complicated for me to wrap my head around. And I came into the show being like, I hope I learn how parachain auction works. And I am about halfway there. So if you have any final thoughts to help me get the other half of the way, that would be awesome. Or we can just wrap it up and I can continue learning another time.
I totally feel for you. Polkadot is one of those ecosystems that's like really hard to get your head around it because it's not exactly apples to apples to other popular networks, right? It's this layer 0, layer 1 dynamic, which is like the parachain level or whatever you want to call it. And once you kind of understand that, you kind of get half of the way. But I'm still maybe 3/4. We'll see what we can do.
Yeah, like we got time. We're here every day.
Yeah. All right, cool. Well, we're going to wrap it here. This has been a nice episode of The Hash. We're going to put this one to bed, and we're going to get back to work. I am Zach Seward. I am joined by Will Foxley, Jen Sanasi, and Naomi Brockwell. Great being here, as always. We'll be back again tomorrow. Hope your Thursday is going well. Stick with us. CoinDesk TV, all about Bitcoin at 3 p.m. Eastern. Check it out. Go read the site. We'll see you tomorrow. Have a great day. Thanks so much.
Have a great day.
Bye, folks.
Bye.
Bye.